So the question is how serious is the Fed? Do they want unemployment to the tune of 1.3 million Americans unemployed that are employed now? How serious are they containing inflation? I'm going to answer this. First, I'm going to share my screen real brief to show our disclaimer. This is not investment advice. I am an investment advisor. You can take this information how you want. Do your own research. This is in the opinion of Halter Ferguson Financial. Okay, so I want to start off by reading something that one of my friends wrote last night. And they encouraged me to do some more research, which I try and stay open-minded. So it's good when my friends clue me into some things. So what they say is, I watched Powell's news conference in its entirety, and this is Jerome Powell speaking after the Fed raised rates 75 basis points. And so what my friend is saying, the Fed wants to see the evidence that the core CPI is stable before stopping raising interest rates. Expect another 125 basis point rise by the end of the year. Expect rates to be around 4.5% into 2024. Fed wants real estate price stability and a reduction in rents. The stock market in check to cool off the job market. And he says, he didn't say this directly about the stock market, but you can infer. Fed seems hell-bent on bringing wage and price stability, target inflation rate of 2%, target unemployment rate 4.4%, job losses of 1.5 million to bring wages and jobs in balance. Market bouncing back too quickly as soon as people think the Fed has relented, and the Fed doesn't want that. This is what my friend continues to say. They want this exuberance vanished, fear to replace optimism to wipe out inflation expectations. Fed will always have the last word. Therefore, better to live with this scenario for the next 18 months and stop complaining. Equities and yields must adjust. We have done in the past, and we will come out stronger on the other side. The USA always does. And I agree with this. And my response to them last night was as such. I said, and I hadn't yet read the Q&A. I said, sigh, the Fed wants to see the whites of our eyes, but is forgetting this is capitalism. This is America, and we can adapt. But if the Fed wants to crush us, they can crush us. We can lay down under their thumb, but we'll be back. Don't fight the Fed. I use a different acronym. But those are my thoughts, or those were their thoughts, my thoughts last night. And then what I did was I listened to the Q&A because it had some things that weren't in the press release. The press release is very short. I'm going to share my screen and show that to you. I want to make sure I share the right screen though. Get on the right tab. I have too many tabs open. Give me one moment. All right. So here's the Fed press release. It's really short. I transcribed the speech from Jay Powell. Wall Street Journal had a version of this on YouTube. And the title is Amid High Inflation, Fed Chairman Jerome Powell announces 0.75% rate rise, Wall Street Journal. So I had it transcribed. I listened to it at 2 times speed, reading the transcript. And the Fed does not, Jerome doesn't directly mention the stock market. they are very serious about targeting 2% inflation. And with core inflation, they're seeing it at 4.5% is where they're seeing the core number. And they're seeing the other number higher than that. The Fed is going to continue to significantly reduce their balance sheet, which means what they're going to do is they're going to sell bonds that they purchased during the crisis. And they're going to, when they sell those bonds, they're giving the bonds to someone and they're receiving cash from the person that's buying them. So what the Fed is doing when they're selling these bonds is they're taking cash out of the economy. And when they initially bought the bonds during the crisis, they were giving cash to the economy. They're not necessarily printing money when they do that, because there's another thing they do when they buy bonds, but that's important to know. And Jerome Powell in his remarks said that they believe they need to keep funds at a restrictive level for some time, and that he believes that, and the committee believes, today we've just moved to a level that we consider at the low end of restrictive. So if they're at the low end today, I think he's hinting that they're going to be higher. And if you look at the Fed's own projection for where they think rates are going to be at the end of this year, it's around 4.4% and 4.6% next year. So the Fed themselves are thinking they're going to raise beyond just like another 75 basis points. If you go off of that, the Fed dot plot, which looks at that, they want to put meaningful downward pressure on inflation. And the Fed actually wants a lower employment rate. They want higher unemployment, and they want a lower wage pressure. We've seen prices decline in shipping and commodities and used cars, and we've seen prices and activity decline in real estate. But we haven't seen that happen in the labor market, and in some of like commercial and building and industrial markets seem pretty hot still, and the Fed wants to curtail that. So the other thing that Jerome Powell mentioned was that the US has had these long expansionary periods with the economy, where from roughly the year 2000 to 2009 was about a 9-year period. I know I'm not getting the dates perfect. And then from 2009 to 2022, we've had a very long expansion. I guess in COVID, we had the decline. So these long 9 to 11-year economic expansions are happening. And the Fed, paradoxically, or maybe it's an oxymoron, I'm a numbers guy, not a words guy, but they want to cause unemployment to set the labor market up for the next 9 to 11-year expansion. They want to squash down on real estate prices, so housing can be more affordable, rents can be more affordable, but they also want to set the path for calm March rising real estate prices moving forward. But to do that, they're wanting them to decline. And previously, Powell had mentioned resetting the housing market, which is kind of scary to me, at least. Like, the Fed has the power of interest rates, but they're trying to exact a force of a tremendous pressure on the economy. So they want the housing market to go through a correction to get to the place where it can march up again. And Jerome Powell said, difficult correction to put housing in a better place. So about 3 weeks ago, Neil Kashkari came out and said that he and other people on the Fed did not like that the stock market went up after the last decision. And Neil even mentioned Twitter bros, and not liking that people are kind of like, okay, well, there's life after this, and people want to see ahead when they're valuing stocks and valuing the future. And at the time, I thought that made me nervous, but a hyperbole reassured me this was just jawboning. I no longer think the Fed is just jawboning. I think they're very serious. One of their mandates is to contain inflation, price stability, and we brushed that off for a very long time because the Fed has the unemployment mandate, but they also have an economic or market stability systematic mandate that's kind of like unstated. And what's happened in previous crises is the Fed has stepped in to ensure the overall financial system. And we kind of forgot about the dual mandate of the Fed. So they're not jawboning anymore. And there's, people who have been very, and these are not Tesla Twitter people, but there have been people that have been very sanguine on inflation because of the technological change we're going through with energy and electric vehicles. And they've been very sanguine for 12 to 18 months now, and they've just been wrong, unfortunately. So, what I'll say is that I think something changed yesterday when Powell communicated this. I didn't take the Fed as seriously as before. And that's about all I have as far as prepared remarks. If someone wants to ask a question on Twitter Spaces, go ahead. You can raise your hand. I'm not really going to talk about what I'm doing with my investments or what I'm doing for clients. The other thing I should mention is that we're going to publish the full transcript that we ordered. We're going to be putting that on our website, and I will tweet out a link to that. So with no questions, I'm just going to go ahead and end the space. Take care and talk with you soon. Bye for now.